back to Payne Free Advice, the 4-part video series created in partnership with Insurance Plus and the Farm Forum. I'm your host, Callie Holt, and I'm joined again with Eric Payne. Thanks for being here, Eric.
Thanks for having me. It's finally feeling like spring out there.
It is so nice. Well, before we get started into what I think most would call the meat and potatoes of crop insurance, I just wanted to take a moment to explain just who I am and how it came about that I am sitting here with you today. I was born and raised in production agricultural family, raising both livestock and row crops. I've been heavily involved in agriculture most of my entire life, growing up in the small town of Wessington Springs, South Dakota. My parents also own and operate an insurance agency there, so this video series really spoke to me from that aspect. I've witnessed firsthand the late night phone calls with producers during an impending storm, or rode around with my dad making house calls when it was convenient for a farmer. Which really is, like you said in our first episode, what sets people apart when it comes to their choice of a licensed insurance agent. One of our main topics this week is going to be multi-peril crop insurance. So Eric, in a nutshell, what is it and who qualifies for it?
Yeah, multi-peril crop insurance, or MPCI policies, must be purchased prior to planting. They will cover loss to a crop due to crop yield due to all types of natural disasters, things like maybe drought, excess moisture, freeze. Really, I mean, if you think about it, would be a God-given weather event.
Right.
Newer coverage options now allow for protection against both yield loss and revenue protection.
So to reiterate, the program is unique because it is a public and private partnership. There's actually currently 15 private companies authorized by the United States Department of Agricultural Risk Management Agency, that USDA RMA that you touched on, to write MPCI policies. The service delivery side of the program, writing and reinsuring the policies, marketing, adjusting and processing the claims, training and record keeping, etc., is all handled by each private company.
That's right, Callie. The program is overseen and regulated by the RMA, the Risk Management Agency. The RMA then sets the rate for each crop that can be charged and determines which crops can be insured in different types of the country. The federal government also subsidizes the product.
Nice.
They subsidize the farmer paid premium to reduce the cost to the farmer. In addition, it provides reimbursement to the private sector for all administrative and operating costs. Otherwise, that would be paid by the farmer.
Wow.
Through this federal support that we have, crop insurance remains affordable to the majority of all farmers and ranchers.
Which is really nice because this is such an important part of crop insurance.
Right.
So Eric, why should we purchase multi-peril crop insurance?
Good question. I mean, if you ask any farmer out there, the main part of their risk management program to protect the crops in the field is going to be crop insurance.
Right.
The first part of it is, of course, peace of mind when you go to bed. Second part of it provides protection against both production and revenue losses. And then, of course, most farmers are out there visiting with their bankers for the year, getting loans, and most bankers want to see that crop insurance in place as collateral for their operating notes. So it provides multi-tier advantages for the farmer.
Right, because you can't stop what you can't stop.
That's right.
It's going to come.
That's right.
Right?
Yep.
Now, I know you and I have actually talked about the fact that there are many different plans that one can choose from, and each situation or farm is different. So we really want to encourage you and urge you to sit down with your agent or set up a time to see the great folks at Insurance Plus just to really go over what plan is best suited for your operation. Can you give us an overview of the plans within MPCI?
Absolutely. As you know, we talked last week, there are multiple different options for plans that farmers can take to insure their crops. But the three big ones around here are going to be your YP, which is yield protection, your RP, revenue protection, and then the RP HPE, which is revenue protection with the harvest price exclusion. All three of these products will use a spring base price that is being tracked right now in the month of February, and they will use the crop's futures price or futures to track in the month of February to get that spring-based price. So for the big three, corn, soybeans, and wheat,
Right.
corn would be the December future, tracked in the month of February, November soybeans, and September wheat, all tracked in the month of February. Those prices should be coming out either today or tomorrow. Currently, right now, as we just looked on the computer here, corn is at $3.89 a bushel. No, beans is at $9.18 a bushel, and wheat is at $5.57 a bushel. So they would take that spring base price times the average for the farmer times the coverage level to get your overall spring guarantee per acre. The YP, the yield protection, is a product that only covers against production loss, right? So yield protection.
Right.
It's only going to use that spring price. You are not going to get any option for a harvest price. The revenue protection, on the other hand, gets the better of the spring base price or the fall harvest price, which would be that same future per crop tracked in the month of October. If that fall harvest price is below what the spring base price is, you may have a yield loss and or you may have a revenue loss. If the harvest price is higher than the spring price, really you could only fall into the category of a yield loss at that point. The other plan, the revenue protection with the harvest price exclusion, is exactly what it says. It works just like the RP plan, except for you don't get the better of the spring and the fall harvest price. Okay?
Right.
There's other options out there. There's some area based or county based products that work similar to those three individual farm products.
Yeah.
And we don't see many people around here taking them. I would say 95 to really close to 100% of our operators take those top three.
Now, you mentioned in the last episode that there was a March 15th deadline, but really there's a lot to think about before that March 15th deadline and a lot more things to, really discuss with your agent.
That's right. The March 15th deadline is what we call the sales closing deadline or the sign-up deadline. If you are a new insured and need to write a new policy, you need to get signed up prior to March 15th. If you're a current insured and don't want to make any changes, it is a continuous renewal, so it'll just automatically renew. But if you do want to make any changes at all to your policy, whether that be to the entity, maybe Ma and Pa was an individual policy and now you're an LLC, that needs to be done. If you want to make any changes to coverage levels for the current crops, that needs to be done. If you want to add any new crops, maybe you're going to farm a different crop this year, or maybe you're going to add some land or farm in a different county this year. There's a lot of things to think about. So really I would encourage anybody that if there's any sort of change to their operation to talk to their agent and just see whether or not they need to do anything prior to the 15th, because it's better to find out now whether you do or not than when it's too late. So
a lot of changes can happen in a year to year, and we had a lot to digest in this video series. It really makes you think long and hard about what your needs are and what best gives you that peace of mind that you referenced. I think, if nothing else, some of our viewers might take a hard look at their operation and make sure that they really are covered the way that they had hoped they would be. Of course, I do think that this information may spark questions, and we really encourage them to reach out and communicate with us.
Yeah, absolutely. I mean, there's probably going to be some specific questions to that specific producer's operation.
Yeah.
And, I would encourage you to message us directly. You can use the Facebook app, you can leave a comment below, or you can call me directly at our office at 225-4270. But like I say, each question may be on a case-by-case scenario. There's a lot of different things going on and a lot of rules that you sort of got to pick through in the crop insurance program. So please do reach out and we can visit about it.
Absolutely. Well, I know we covered a lot this episode, but we have so much more to cover next week when it comes to planting dates, late plant dates, claim reporting process, deadlines, and so much more. I know you have a lot of information to give us. So be sure to tune in next time for another episode of Payne Free Advice.